Hello, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news Wall Street is following Shanghai sharply lower. In Shanghai yesterday, shares tumbled more than 5%. On Wall Street this morning, trading had briefly stabilised, helped by the US CPI report for September showing muted inflation. But in mid-afternoon trading, stocks are falling again and are now down more than 2% on top of yesterday's 3% drop. And the sell-off is accelerating. Those US inflation numbers pegged the price rise rate back to 2.3%, down from 2.7% in August. Core inflation, that's without food and petrol, held steady at 2.2%. This lower inflation managed to boost real wage gains, with US real earnings up 0.3% from August. But over the whole year, things are not so bright. Real average hourly earnings increased just 0.5% in the year to September 2018. To get that, Americans had to work longer hours, and with those extra hours, they got 1.1 extra real increase in average weekly earnings in the year. Also not so bright was an unexpected jump in the level of unemployment claims last week. And staying in the US, it has been announced that retirees will get a 2.9% rise in Social Security benefits in 2019, boosting these payments to 62 million people. This is the largest single component of the deficit spending. For all the trouble China is facing in its economy, it has defied predictions and had a very successful bond market issue. China sold $3 billion in US dollar bonds, raising money easily and cheaply in the midst of a global market sell-off. The amount is immaterial, it's just a test of their market standing. This tender had bids of $17 billion and achieved a 3.63% yield on its 10-year offering, a 45 basis point premium to equivalent US Treasuries. This is much better than was expected and hardly a premium to its equivalent yuan 10-year. In the latest HSBC ranking of the best places to live and work in the world, Singapore came out as number 1 again. And New Zealand came in at number 2, matching its 2017 ranking. We are not so high on the earnings scale, but bat very high on most other aspects. Australia slipped one place to 6th, and France was a big mover up in the rankings as it positions itself to benefit from the Brexit fallout. The US Treasury 10-year yield has slumped today, down 9 basis points to 3.14%. Their two-turn curve is back to 30 basis points. Gold is sharply higher this morning at $1,221 an ounce, a gain of $32 overnight. US oil prices are down sharply again today, down another $2 and now at $71 a barrel. The Brent benchmark has fallen a bit more to just over $80 from 50 cents a barrel. Unexpectedly large rises in US crude stocks as well as petrol inventories is driving today's retreat. And the greenback has retreated. The Kiwi dollar is starting today at 65.2 US cents and is up 0.5 cent in the past 24 hours. That takes us back to where we were just 10 days ago. On the cross rates, we're firmer as well at 91.6 Aussie cents and 56.3 Euro cents. That pushes the TWI up to 69.2. I'm David Chaston. That was 98.9, brought to you by interest.co.nz.